Jeff Peterson from Heartland Farm Partners is our marketing analyst this week. The USDA will release its latest estimates on supply and demand Wednesday. The agency is currently surveying tens of thousands of U.S. growers for its final report in January on harvested acreage, production, and storage. Jeff joined us Friday morning to talk about his expectations for this year's crop, how oil is affecting corn and soybean markets, and to look ahead at prices in 2015. Are you getting a final sense of what this year's crop looks like?
Yeah, no, that's always a fun time of the year, Jeff, is that, everything's coming together. We aren't expecting, as we look at this next crop report, we really aren't expecting any type of changes on acres or yield. I think the whole focus will actually be on the demand side. And as we study that, the only thing that we can see, Jeff, that we think needs to be adjusted, we think the soybean exports should maybe come up 15 to 20 million bushels. So as a result, the ending stocks, as we look at corn, remain unchanged, I think, going forward. On the bean side, though, I think we should tighten up that carry out about 25. So we could be looking at an ending stock number about 425 million bushels.
We'll look into 2015 and what you guys think will happen with acres once that planting season rolls around.
Yeah, I know. That's that time of year again, isn't it? What we're looking at right now at our numbers show is probably a minimum of about 3 million acres of extra beans. Now, if the weather's really good, that number, and everybody can get in the field and plant like they should, that number could go as high as 5 million more acres of beans. Over on the corn side, though, as a result, we'd expect about 2 million acres less than what we had last year.
So 3 to 5 in beans, meaning what? What does that mean for the outcome?
Boy, you're asking all the right questions today, Jeff. What that means in the outcome is as we put those into our balance of supply and demand tables and look at the ending stocks, which is always the important number to look at, this year we're somewhere around about 450 million bushels carry out. That would take us up to 750 million bushels. Now, if we translate that into price, all of the things being equal, and we don't see much for weather problems coming out of South America, nothing really changing anywhere else in the world, and those are big things to assume. We'd be looking at soybeans in probably the upper 7s.
All right, we'll come back to recommendations later on, but short-term movement for beans, where is it coming from?
Yeah, short-term, and that's what's been the big thing. Early on, it was all about soybean meal. That was driving prices higher. Now, since it's rolled over, it's hard to believe, Jeff, since our November high in soybeans, beans actually probably dropped a little bit over $1 a bushel. And that type of move, that's really been pure technical. As the traders ended up getting more comfortable with the amount of supply of meal, and they're getting more comfortable with that. We're seeing the basis levels drop in the Eastern Corn Belt. As the rail values started to soften, and that is happening. Each week the reports that come out show weaker rail values. As that started to happen, we see individuals start selling soybeans, and then technically we ended up breaking some up, key uptrending support lines. And when that happened, we started seeing the market move lower.
Crude oil impact?
Yeah, crude oil definitely is a big part. I mean, if you look back to it, crude oil, haven't seen prices this low, really going all the way back to September of 2009, back 2009. It's down, over 40%. That's a huge number. So it definitely puts some pressure on beans and, for that matter, corn also.
Yeah, into corn, how does it affect ethanol? And for that matter, what is your opinion on ethanol right now?
Yeah, it definitely is an impact on ethanol. We got to respect what's going on in the crude oil market because it's a key component of the pricing of corn. As we take a look at ethanol currently year to date, and this is based off of really the last numbers that came out of EIA on Wednesday, their numbers would show that USDA says, we're about 4.6% ahead of last year. Currently, USDA is forecasting really the demand really for ethanol, the bushels going in ethanol, to be pretty much unchanged. So it's running a little bit ahead of pace. We think as it goes through the rest of 2014 and into 2015, we think the demand for ethanol is going to stay pretty solid.
Tell me where you think corn and beans right now are valued. Are they overvalued, undervalued?
Yeah, that's the right question to ask. And right now, we would say for both corn and beans on the 2014 and 2015 crops, from a fair market value perspective, they're overvalued. There's no doubt about it.
How does that affect your feelings on selling both new and old crop in both?
Yeah, so as we've seen this move go higher and as it started to roll over, we want to be a seller. And I know I've been saying that for quite some time, but we do feel that there's downside risk in the 2014 and 2015 crop years. So we'd want to be a seller on corn, also on soybeans, probably more so on the beans than even the corn.